you feel like taxes are eating away at your income every year? Many business owners feel like the more they make, the more they're giving away, but there's actually some really cool tools and some options that you can take advantage of that help save taxes now and in the future. Just start saving. We're going to change your world. Every year, especially around tax season, business owners realize and see how much Uncle Sam really gets to keep of the income that they're working hard for. The challenge here is the more you make, the higher tax bill you're paying, the less you have to set aside for your future and your family's future. Maybe you want to expand the business. Maybe you want to save up for a retirement portfolio. Maybe you just want to be better financially healthy for your family and what they need in the future. But all these goals are harder to reach when taxes keep shrinking down the money that you have available to do such. And while I highly recommend having a good CPA on your side or a tax advisor, there are some options you can take advantage of right now that do not require a CPA or a tax advisor, and we're going to talk about it. To better explain some of these concepts, let me tell you about a client that I personally have and how we helped them achieve some of these goals. My client, Randy, we'll call him, and his wife own a real estate business operating and managing several different rental properties, and they're generating around $300,000 in revenue each year. Before I met them, at that point in time, they were maxing out traditional Roth IRAs, which if you are above the age of 50, you can do $8,000 a year into a traditional IRA. So they were doing $16,000 a year into traditional IRAs, giving them $16,000 deducted from their income, therefore allowing them to pay a little less taxes on their income. Well, as you can imagine, Randy and his wife wanted to save even more and have more of a deduction on their taxes. So here's what we did. Because Randy and his wife are both employed by their real estate LLC, they can have an employee benefit plan called a SIMPLE IRA. And with the SIMPLE IRA, you can contribute $16,000 each. Plus, because they're over the age of 50, they can do an additional $3,500. So they can both contribute $19,500 each, which is already double what they were contributing. Actually, that's more like quadruple what they were contributing into the traditional IRA. Because this is an employee benefit plan, the SIMPLE IRA, the business or the LLC will actually match 3% of their salary, which is $50,000 each. They chose to take a $50,000 income every year. So the LLC is going to match an additional $1,500 per person, making their total deductible contributions $42,000. Remember, before, they only had a deductible of $16,000. So they more than doubled what they're able to write off on their taxes and save on their income taxes. Now, how this works is Randy and his wife will get a reduction on their personal taxes because they're doing the $19,500. So take away $19,500 from the $50,000. Now they're only paying taxes on that. Whereas the LLC, the LLC is contributing an additional $3,000 a year. That's also a write-off or deduction for the LLC. So on both sides of the fence, they're getting a write-off, plus those accounts, the SIMPLE IRAs that we're working with, will earn 5, 6, 7, 10, 12% interest, so it's going to continue to earn interest, and they're saving taxes now. Now, Randy also wanted some tax-free money working for him, so we also set up what is called an executive bonus plan, which is a type of permanent life insurance. And with this type of permanent life insurance, generally we use what's called an index universal life. The cash value is going to grow on a tax-free basis inside that life insurance policy. Here's the really cool benefit to that. Randy and his wife will have access to that money, so if they're wanting to expand the business, pay for repairs on some of their existing properties, purchase more properties, they have access to that money tax-free. Or if they just want to let it accumulate, it will then turn into a tax-free income stream in retirement. This makes it extremely flexible for how they want to use it, when they want to use it, and the business gets a write-off because the business is doing bonuses into the plan. Here's how that works. With the executive bonus plan, the company or the business can contribute whatever they determine. So if Randy and his wife want to do $500 each on their own dollar from their paycheck, from their salary, and then the LLC, they want the LLC to pay them $500, so that's $1,000 a month, let's just say for Randy. That's $1,000 a month, but half of that, so $12,000 a year, half of that is a write-off or deduction to the LLC because it's seen as a bonus. Now, Randy, as the employee, will have to pay a little bit of taxes on that $6,000 from the LLC because, like I said, it's literally a bonus. That's where the name Executive Bonus Plan comes from. So Randy, on his W-2, will pay a little bit of taxes, but since Randy is also the owner of the LLC who gets a write-off on that, it's kind of a wash. The real benefit here is the access of capital, which is tax-free. Now, you might be sitting there thinking, how much does a simple IRA cost? Why is it, or how is it better than a 401k? And how in the world do you get tax-free money from a life insurance policy that's supposed to pay my family when I die? And to that, I would say very valid questions as to which all of my best clients will ask me. A simple IRA is generally a lot easier to establish because you do not have to have a third-party administrator in place, and you do not have to do a bunch of filings every year with the IRS like you do with the 401k. So this means it's way more efficient for you, but also way less fees because you don't have to pay a third-party administrator to manage everything for you. Now, when it comes to the life insurance with the right setup, the executive bonus plan does allow you to have access to your money as a loan, which is tax-free to you. You might ask, do I have to pay this back because it's a loan? And I would say, yes, you probably should, but you certainly do not have to. Any unpaid loan amount that is on your account simply gets deducted from the insurance when you pass away. You're essentially just leveraging your insurance while you're alive. Think of it as a home equity loan that you get from a bank, whereas with a home equity loan, you're taking out equity of your home, and it is a loan, so it's tax-free. The difference is you have to pay that back, plus whatever interest that, the bank is charging you. With the insurance company, there is a loan rate, 3%, 4%, 5%, depends on what the market's looking like on rates. I highly recommend everyone to pay some of that back, pay it all back, but if you don't, it will just come out against the insurance amount when you pass away, meaning it is not required of you to pass it away. Now, side note here, if you made it this far to the video, here's a hot tip. If you specifically want a certain amount of insurance to pass on, and whatever you're loaning out doesn't fulfill that need because it gets deducted from your insurance, I highly recommend having an additional term policy or an additional permanent plan that's strictly used for life insurance. They're way cheaper, more flexible, but you do not have the option for taking money out like you do with the executive bonus plan. So there's a hot tip for you. With these steps, Randy and his wife are now saving more on taxes, setting more money aside, plus setting aside another tax-free bucket in the future where they can access it whenever they want. If you're a business owner and you'd like to learn more about how to make or keep what you have earned, leave a comment down below, or better yet, click the link in the description. You can get on my calendar, you can send me a message. I'll be more than happy to help answer any of your questions. And for now, I'm gonna sign off. God bless you. I hope you have a wonderful day.